Hi guys, this is Shankar. In this video, I will explain about leading ledger, non-leading ledger and extension ledger in SAP S4 HANA Finance. After enterprise structure and global setting, we have three more important concepts: chart of accounts, ledger concept and GL settings. In previous session, I explained about chart of accounts. In this session, I will explain about ledger concept. Now we'll see what is ledger concept. Earlier, we worked on account approach when we are using classic GL. Then we got new GL, there we shifted from account approach to ledger approach. Now we will see what is account approach and what is ledger approach. Account approach. Before ledger concept, we are working on account approach. Account approach means we need to create different GL accounts for different accounting principles. For example, we have plant and machinery, and for that we have two different depreciation requirements. As per company law, you have to follow straight line method, the rate of depreciation is 10%. As per income tax, you have to follow WDV method, the rate of depreciation is 15%. Now assume we are working on account approach. How many GL accounts you have to create? We have to create two different depreciation accounts and two machinery accounts. It means depreciation 1, depreciation 2 accounts. It means you have to create multiple depreciation account, you have to create multiple machinery accounts, and you have to do multiple mappings. It is a lengthy process and will create more confusion as your number of GL accounts are more. Now we got new GL, there we shifted to ledger approach. Now what is ledger approach? Now we'll see in detail. Ledger approach. Here two terms are there, GL and ledger. Don't confuse here with the GL and ledger. GL means your GL master data to post different transactions on regular basis. Whereas ledger means it is your reporting point of view and books of accounting point of view. When we have to maintain the books of accounts with the two different accounting principles, in that case ledger is required, that is parallel accounting. Example, requirement of local GAAP with IFRS. In this case we will use ledgers. For example, here also, here what happened in account approach, what happened for this requirement, we are creating different GL accounts. For WDV, for as per income tax, we are creating different GL accounts. Instead of creating GL accounts for different accounting principles, for different requirements, you have to create ledgers. That is the ledger approach. Now evaluation of ledger concept. Earlier ECC 4.7, when classic GL is there is no ledger concept. We are working on account approach and the table is GL T0. Later we got ECC 6, there we got new GL where parallel accounting was introduced. Parallel accounting means we are going to maintain two books of accounts or multiple books of accounts to meet different accounting principle requirements. There we got ledger concept. But ledger is not mandatory there. Both the classic GL and ledgers are available. For example, if client is having only one accounting principle or he don't have any other requirements, he can follow either classic GL or ledger concept. He can follow classic GL also. That option is there in earlier ECC 6. Later in S4, now in S4 there is no concept of new GL as there is no classic GL. By default new GL is mandatory in S4. And ECC 6, the table is flaggle flex T. From GL T0 to we shifted to GL flaggle flex T. There the table was shifted to AC doc A, universal general. So every company code, whenever we are adding, by default new GL is activated here. This is about evaluation of ledger concept. If you observe in the previous screen, here we have two requirements. Requirement of local GAAP with IFRS. Instead of creating multiple GL accounts, you can create here two ledgers. Similarly, here also, here we have two requirements as per company law and as per income tax. Instead of creating multiple GL accounts, you can create multiple ledgers here. In this way, we shifted from account approach to ledger approach. Now ledger types. How many ledgers we have in S4? We have two ledgers, standard ledger, extension ledger. What is standard ledger? It means a ledger that contains full set of configuration settings and full posting information is called a standard ledger. This means all business transactions, that is AR, AP, AA, GL postings is possible here. So this is standard ledger, full set of journal entries for all business transactions. This is standard ledger. Then extension ledger. Extension ledger is also called appendix ledger or delta ledger. Appendix ledger always requires one underlying standard ledger as base ledger. So this is underlying ledger. This is a base ledger. Extension ledger always requires one base ledger. That base should be standard ledger. That is called underlying ledger. The standard ledger may be leading ledger or non-leading ledger. So over the base ledger, these ledgers staple on the top of the underlying ledger. So these ledgers are stapled on the top of the underlying ledger. And standard ledger again divided into two types: leading ledger, which is indicated with the 0L, and non-leading ledger. Your primary books of accounts you are going to maintain with the leading ledger, and other books of accounts you are going to maintain non-leading ledgers. So standard ledger means all business transactions are possible here. Whereas extension ledger means the same standard ledger will come here. Over the standard ledger, you will have provision to post some ledger specific postings. That is extension ledger. Now we will see other ledgers. Now leading ledger. What is leading ledger? Whenever we create a company code, system automatically creates one main standard ledger which is indicated with 0L. This is leading ledger. SAP provides the leading ledger 0L as a standard, and by default it will assign to your company code. So here you no need to create any leading ledger. By default system will give you the leading ledger. It means this is a system delivered one. You can define only one ledger as the leading ledger for each client that is valid for all company codes, and it cannot be deactivated. Leading ledger you should have only one. Non-leading ledgers you may have multiple, and extension ledgers you may have multiple. But you can have only one leading ledger. If you see this diagram, you can understand. Under client 800, you have one leading ledger, and that leading ledger is applicable to all company codes. Here you have 4 company codes. For all company codes, this leading ledger is available. Here the main important decision is which accounting principle to use in the leading ledger. That is purely depends on your consolidation or global reporting point of view. For example, in India you have established one business and you have a global presence in US and UK. Then as per India consolidation, you have to follow Indian accounting standards as for leading ledger. When non-ledger specific financial documents are posted, this ledger is always updated for all company codes. If you post any general transactions in leading ledger, it will update to all company codes. That's what it is. Leading ledger is fully integrates with all subsidiary ledgers, and it forms the basis for other ledger which may be non-leading or extension ledger. So for example, you are following IAS as a leading ledger. It has integrated with different subsidiary ledgers. For example, FSCM, your bank ledger, asset accounting with FI, and integration with accounts payable FY, and sales and distribution accounts receivable with FI. These are all subsidiary ledgers are integrated with your main leading ledger. So leading ledger is fully integrated with all its subsidiary ledgers. Leading ledger currency. In leading ledger, we can define total 10 currencies. First is local currency. This is called first FI currency. First FI currency will be your company code currency. Second FI currency is global currency. It will come from controlling area. So the second FI currency will come from controlling area. Currency rule in controlling area. Relationship, controlling area currency. If it is one-to-one relation, company code currency. If it is one-to-multi, group currency. What is one-to-one relation? One controlling area with one company code. That is one-to-one. If it is one-to-one, company code currency 10. If it is one controlling area having company code 1, company code 2, company code 3, this is one-to-multi. If one-to-multi, group currency 30. So if it is one-to-one, 10, one-to-multi, 30, the same will come from controlling area to as a second FI currency. For group currency, use T code SCC4 in your system. Now CO object currency. What is CO object currency? CO object currency is used for your internal order or your cost centers. If you want to use the currency, that's CO object currency. What is the rule here? The relationship and controlling area currency. Controlling area equal to company code, then it is freely definable currency. Controlling area is not equal to company code, then CO currency means this currency. The same currency will applicable to CO object currency also. So this is about the first two currencies. Then apart from these two, in leading ledger you can define 8 freely definable currencies as per our need. So total 10 currencies are there, 2 plus 8. Now fiscal year variant, posting period variant, and accounting principle in leading ledger. Once you select your company code along with your leading ledger, by default it will copy all your fiscal year variant, posting period variant and accounting principle which you defined and assigned to your company code earlier in global settings. It means whatever in global settings we defined and assigned the fiscal year variant, posting period variant and accounting principle to our company code, the same will copy to the leading ledger. By default it will copy to our leading ledger. Ledger specific postings in FB01F. If you post any ledger specific, that is non-leading ledger specific or extension ledger specific, that data will not flow to the leading ledger. Non-leading ledger. Any ledger which we are creating along with your leading ledger 0L is called non-leading ledger. And a non-leading ledger may be a standard ledger or an extension ledger. Since accounting principles differ from country to country, region to region, to comply with the global requirements, we will create non-leading ledgers. Why we are creating non-leading ledgers? To comply with the global requirements, we are creating non-leading ledgers. Example: a company established and operating in India also have global presence in US and UK. It has to prepare financial statements as per Indian requirements and as per US GAAP and IFRS. By default, system will create 0L and we have to create additional non-leading ledgers to meet the reporting requirements of the countries. We can prepare our financial statements after posting the ledger specific transactions to the non-leading ledger. Here we are operating from India, hence the leading ledger principle will be in consolidation or global reporting point of view. Here consolidation where it is happening, in India it is happening, hence Indian accounting standard will be assigned to our leading ledger as accounting principle. Then we have to create two separate non-leading ledgers. This is leading ledger and two non-leading ledgers we need to create. Non-leading ledger, when we use non-leading ledgers for local requirements such as asset valuation, inventory valuation, income tax requirements point of view or any other local requirements point of view. Second one, when we have operations in multi countries, we can use non-leading ledgers for reporting point of view. So one company code having multiple ledgers are possible. Non-leading ledgers are created supplement to the leading ledger, that is parallel to the leading ledgers, and need to activate manually for individual company codes as per the need. In case of leading ledger, it will create automatically by default. But in case of non-leading ledgers, we have to create manually company code wise. It is purely optional and used for reporting only. It means if the user has no other requirement, if the company has no other requirements, it has only one accounting principle, then no need to activate non-leading ledger. It can't be activated in the middle of the year. Non-leading ledgers you should always plan in the year end. If you want to activate, you need to follow new migration process given by SAP. It means non-leading ledger we can't activate in the middle of the year. A copy of the entry posted for leading ledger 0L will also store for non-leading ledger in AC docket table, which leads to more consumption of database. It means if you post 100 documents here in leading ledger, the same will copy to these two non-leading ledgers. If you have 5 non-leading ledgers, it will copy 500 duplicate entries. Like that, it will consume more database. Posting to the non-leading ledger do not impact any other ledger. If you post ledger specific, for example, if you are posting this non-leading ledger, US GAAP ledger, then these postings will not affect here and these postings will not affect IFRS ledger. If you post any ledger specific, IFRS ledger specific, then it will not impact, then the data will not flow to the US GAAP ledger and leading ledger. That is the meaning of this. Posting to the non-leading ledger do not impact any other ledger. Non-leading ledgers can have its own fiscal year variant, its own posting period variant and accounting principle, and different currencies apart from 1 and 2. First two currencies by default will copy from leading ledger. Next, parallelly we can have two profit and loss accounts and two balance sheets. We can run the report leading ledger wise and non-leading ledger wise. Non-leading ledgers are not integrated with other modules like logistic, controlling, but it is integrated with sub-modules like asset accounting for parallel valuation. It means it is not fully integrated, but it is integrated with sub-modules like asset accounting. Next, separate document types and number ranges to be defined for non-leading ledgers. So it means in OBS 7 you have to define for non-leading ledgers also. Demerits of non-leading ledger. It can't be activated in the middle of the year. If you post any general postings, then it will generate a duplicate document. Non-leading ledgers are not integrated with other modules like logistic and controlling. Extension ledger. What is extension ledger? Extension ledger always requires one underlying standard ledger as base ledger. It means the same standard ledger is here. The standard ledger, again, it may be a leading ledger or non-leading ledger. Over the above, you have some provision to post some ledger specific postings. That is, these ledgers staple on the top of underlying ledger. This is underlying ledger, underlying standard ledger. Over the above, it is stapled to post some ledger specific posting. This is called extension ledger. An extension ledger is assigned to a standard ledger and inherits all journal entries of the standard ledger for reporting. So, it inherits all entries from the standard ledger for reporting purposes. Because this is the base. From here, all will come for reporting purposes. So, you can draw financial statements by using extension ledger. The underlying ledger must be a standard ledger. We already seen the underlying ledger, this one must be a standard ledger. It means either leading ledger or it may be a non-leading ledger. Posting made explicitly to an extension ledger are visible in that extension ledger but not in the underlying standard ledger. If you post any transaction here, it will be visible only here. It will not flow to the standard ledger. It will not flow to the standard ledger. That is the meaning. Extension ledgers can be activated at any time during the year as there is no restrictions like non-leading ledger. In case of non-leading ledgers, you can't activate in the middle of the year. Extension ledger can't be integrated with asset accounting and material ledgers, etc. So it has no fully integration. It is not fully integrated. Extension ledger will not consume database as it will derive data from its underlying standard ledger. If you post any general transaction, for example, we have one leading ledger, one non-leading ledger and one extension ledger. If you post any general transaction, document will be there in leading ledger and document will be there in non-leading ledger and no document in extension ledger. In report we will get the value, but in AC docket no physical document. If you check the GL line item or trial balance, you will find the document for all. When we use extension ledgers, extension ledgers has its own requirements and will be used for specific purpose. Everywhere you can't use extension ledger. For asset accounting you can't use extension ledger. Where we will use extension ledger? Number one, CO adjustments. If you want to do any repostings in CO or some adjustments to CO after your FI period close, then you will use extension ledger. Predictive accounting. Under margin analysis, when an accounting document is there with reference to sales order, where you will report that accounting document, here you will use extension ledger. Simulation ledger. Currency valuation point of view, when the actual execution is not completed for currency valuation. Then valuation difference point of view. For these circumstances we will use extension ledger, but we will not use in all cases the extension ledgers. If you observe the picture, a copy of entry posted for leading ledger 0L will also store for non-leading ledger in AC docket table. For example, we have one leading ledger, one non-leading ledger, one extension ledger, 0L, N1, N2. This is the leading ledger, this is the non-leading ledger, this is the extension ledger. Non-leading ledger also standard ledger. Extension ledger is a standard ledger that may be leading ledger or non-leading ledger as underlying ledger. Over the above, it has some provision to post some ledger specific transactions. For example, AC docket table, how it will update? If you post any general transaction that is non-ledger specific, if you post here, it will copy here in non-leading ledger, but it will not copy in the extension ledger in AC docket table. If you post any ledger specific, leading ledger will not update. If you post a non-leading ledger specific, it will update here and it will not update here and it will not update here. If you post any extension ledger specific, it will update here and it will not update here. Advantage with extension ledger, it will not generate duplicate documents like non-leading ledger. Demerits of extension ledger. We can't post vendor or customer reconciliation accounts. We can't post with the GL accounts with open item management. Extension ledger does not integration with asset accounting and material ledger. Conclusion. Extension ledgers may reduce the use of non-leading ledgers but not replacement for non-leading ledger. Now the differences. Leading ledger versus non-leading ledger versus extension ledger. We will see the differences. Here I summarize the differences. Ledger creation. Leading ledger by default. Non-leading ledger we have to create manually for each company code. Same extension ledger we have to create manually. for each company code. Integration. Leading ledger is fully integrated with all other subsidiary ledgers. Non-leading ledger is not fully integrated but integrated with asset accounting for parallel valuation. Extension ledger also is not fully integrated with all other subsidiary ledgers. Next, activation. Leading ledger is by default. Non-leading ledger, middle of the year is not possible to activate. Extension ledger, at any time we can activate or deactivate during the year. Now, fiscal year variant, posting period variant, accounting principle. Non-leading ledger can have different fiscal year variant, different posting period variant and different accounting principle. We can see here fiscal year variant is V3, in case of non-leading ledger K4. In case of leading ledger posting period PPV1, here PPV2. Here IFRS, you are following here local GAAP. But in case of extension ledger, only posting period variant and accounting principle you can choose differently, and fiscal year variant must be as per underlying ledger. Next, non-ledger specific postings in a B50. If you post any non-ledger specific postings, that is general data in FB50, leading ledger physically data will store, non-leading ledger also physically data will store in AC.OK. But in extension ledger case, physically data will not store in any table. Specific ledger postings in FB01L. If you post any ledger specific, if it is non-leading ledger, if it is extension ledger specific postings, that data will not flow to the leading ledger. Here, non-leading ledger case, only non-leading ledger specific data postings will store physically in the table AC.OK. Similarly, extension ledger, only extension ledger specific postings will store in physical table, that is AC.OK. Now, currencies. First currency in case of leading ledger will be your company code currency. Second currency will come from controlling area. Here also, in case of non-leading ledger, first currency of leading ledger, by default, it will copy from your leading ledger. And second currency also will copy from leading ledger. So, first two currencies, in case of non-leading ledgers, by default, it will copy from leading ledger. And freely definable currencies, in case of leading ledger, we have 8 freely definable currencies. In case of non-leading ledger, we can add or remove, we can add new or remove also. It means you can have different freely definable currencies in case of non-leading ledger. Whereas in case of extension ledger, everything currency you can't change, it is as per your underlying ledger, that is as per your underlying standard ledger. The currencies cannot change. So that's it about the explanation of leading and non-leading and extension ledgers. The configuration part I will do in the next session. If you find interest of this video, please do subscribe my channel and also like and share to others. Thank you. Have a nice day.